Hello, welcome back to my channel. I wanted to give a portfolio update. That's Claude. Let's go actually to where I meant to go, which is here. Trading 212. Here we are. Here's my account value. You can see it. I'm not scared to show it. That's what it is. My cash in here only sits at £3,000, but don't worry, I do keep cash in other accounts. Not a lot, probably only have about 10,000 at the moment, but sometimes I have 20, 25, 30. There was a time earlier in the year or last year when I had up to like maybe £50,000 in cash. That was too much, I thought. Now you could argue that I'm overinvested. Anyway, either way, I'm young. I've just turned 31. My biggest positions are still Microsoft at 28,600. By the way, there's also more to come in my stocks ISA, another 70k in my stocks ISA. So my total portfolio is at 182,000. 28,000 in here. There's some more in my ISA. I think it's 13,000. So I've actually got like 40 grand in Microsoft if you count both. And as you can see, I am down on it. I'm down in this, but I think I'm flat or slightly up in my ISA, but that doesn't matter. We're going to get to the ISA soon. We'll take a look at the ISA in a minute. I'm down 6%. I'm not worried. It's a great company. I was buying Google very, very heavily a year ago, a year and a half ago, start of 2025, because it was undervalued. Everyone said so. And everyone said so. All the research, all the AI, my family, friends, people I was watching on YouTube, other channels like this said Google was so undervalued. The most undervalued of the Mag 7 American stocks, which are Google, Meta, Microsoft, Tesla, etc. And I made great money on Google. I did sell too early and I could have made more. And now they're saying the same thing about Microsoft. And then my next biggest position after that is VICI. And then they get a lot smaller. I've got silver. I've got some gold further down. I've got silver again because this one, the iShares physical silver, actually is a lower expense ratio, and it shows you that down here somewhere. The expense ratio is 0.2%, whereas on the wisdom tree, I think it's higher, 0.49. And once I realized that, I started buying silver in this one. And I'm down a lot less on the iShares. The physical silver here on wisdom tree, I'm actually down 18%. God damn. But look, I'm actually not quite at the peak. We did hit 78 euros in here. I'm sure it'll get back up there again soon. And I could always wait till it's flat and then sell, and then or buy more of this one, which I'm nearly flat on. I don't know. I'll figure it out. VICI, by the way, I've spoken about it before on the channel. Real estate. They own hotels and casinos in Las Vegas. They pay a 6% dividend, which you can see here, which does fluctuate, but it's the safer one in my portfolio, an experiential real estate investment trust. You should check it out. This is not investment advice. Obviously, my opinions are just my opinions. You should get your own financial advisor and do your own research. But in my opinion, VICI, pretty good. You can look at it over the last 5 years from 2021, and it's been going between $25 and like 32 or 34, $35. It just about hit there. And it's just been going back and forth between that price. And the dividend is good. My average price is pretty good, pretty healthy. I'm down a little bit, but I'm collecting a nice dividend. Not worried about that. Meta has recently come down, similar to Microsoft. I think Microsoft is undervalued right now. We're down 7% year to date. It was at 524. And, I think personally, I think it's likely to get back up to its sort of peak price again. I've seen it happen. Let's see if I'm right or wrong. But right now, I'm not worried about holding it. Meta has come down a lot, and I've made money on it many times trading it up and down. It was the first stock I ever bought. I bought 5 grand with my own money. I've Meta, my own earnings. Look, the peak was $785. We dipped all the way down to 525. What a buy that was there, 525. Now I'm sitting at 609, so I'm basically flat on it. I might add to it. I might sell some Microsoft and VICI if they end up, flat or green. As soon as they dip green, sometimes I take some money out because I've been getting dividends even from this. And if I want to rebalance, look, nearly 1%. If I want to rebalance a little bit, I'll sometimes take some out of Microsoft and trade out and then buy some other stuff that's becoming more undervalued. Duolingo, hopefully we'll have a resurgence. I thought it was a good buy. I obviously got in a little bit too high. But at one point we were all the way up here, $500. Well, per share. And I've got some AI stuff to talk about with you. I've got some Gemini stuff here talking about moats of companies that I've been researching, S&P Global, MasterCard, and Meta. And there's some more over here. There's some Claude stuff here, same companies, ServiceNow, S&P Global, Meta. And there's also one more thing here, some Trump news. Iran, or however you want to say it, Iran. How do we say it in England? Iran? I think we say Iran. I think Americans say Iran. I keep forgetting. I think I say Iran. Doesn't matter. However you want to say it. Look, there's some macro news here, some economic news, and we're going to come to that last because I don't really like the news. I don't really like reading about potential recession, Strait of Hormuz, wars, all this kind of stuff. But it's here, and we're going to come to it right at the end. You can skip to it if that's all you wanted to know. If you wanted the stock stuff, you're in luck because I'm just going to finish with what have I got further down. I've got more silver, I've got MasterCard, ServiceNow, which by the way is one of the ones that's looking to be quite undervalued. So is Intuit, according to my research. Obviously, again, do your own research. This company is a software company, enterprise cloud computing solutions that defines, structures, consolidates, manages, and automates services for enterprises worldwide. Whatever that means, artificial intelligence, machine learning, all sounds great. Look into what it does. Look into the price. Over the last year, we're down 50%. I'm buying in now. I'm buying in, and hopefully it'll get back up here, and I'll trade out and make profit. And that's the aim of the game. MasterCard, same deal. In my opinion, starting to look undervalued. Check it out. Look at the PE ratios and all that kind of stuff. They don't actually show it. No, they do show it on here. 28.6. Anything under 30 is something you might want to look into. This guy said, I'm not surprised. Decent earnings. It went down as most stocks tend to drop after it. But I thought, well, yeah, whatever he's going on about, who knows. What else we got? We've got Intuit, S&P Global, not the same as ServiceNow. I tend to mix them up, but it's not the same. And I might be adding to it soon. Down 20% on the year. PE ratio of 25. What's Intuit's? Intuit is 25 as well. Intuit, by the way, financial management and compliance. They own QuickBooks and they do stuff with tax. Look into it. S&P Global is credit ratings, benchmarks, analytics, workflow solutions. Yeah, also to do with tax and business and software, and that's very vague, but look into what it does and the PE ratio and all that stuff. Get some data, do some AI research. Down here, what have I got? Adobe. Any comeuppance? Any resurgence? It went right down to 225. We're down nearly 40% on the year. I got in at 276 apparently. Could be worth adding to. Could be potentially undervalued. Maybe want to look into it. Mercado Libre is like the Amazon of Latin America, and yeah, definitely not a very, very safe investment, very volatile. Look at it all over the place. Who knows if it's actually worth 2.5 grand a share? But I'm in for 2 grand, and it's something I'm going to hold. Moody's, another company that is to do with tax, I believe. What's their PE? 30. And integrated. Oh, it's actually risk assessment. I do apologize. But another software company. Okay. And then as we get lower, much less interesting small positions, gold, Visa, uranium. Got some commodities down here. Gold miners, copper, Cameco, platinum, palladium, silver miners, happy retirement, a couple of safer things that I might start adding to one day if I really want to be safe. I used to have the S&P 500 and just ETFs, but that was too boring for me. Apparently, I like to live on the wild side. So have a look in my ISA. This one's 70 grand with no cash, fully invested. Once again, Microsoft, but this time we're basically flat. I'm only half percent down. VICI, same deal. Got an even better average in here, $28 instead of nearly 30 in the investor account. Duolingo, I'm down quite heavily again, but let's see what happens with that company. More silver, more service now, and I'm actually green on it because I got in just at $94, which was a fantastic purchase. Imagine I got in even lower, 83. That would have been unbelievable. Gold and silver, Intuit, same names, gold miners. Well, look, we've got some Meta. Just started buying in at 604. What a buy. Wish I'd got in at 525 in March. What a fool I was. What a terrible fool. Gaming and leisure properties is similar to Vici. They own, it's a real estate thing. They own they give you 6.5% dividend, and they've got real estate for gaming operators in triple net lease arrangements, headquartered in Wyoming. Check it out, Vici, VICI, and this one, GLPI, Gaming and Leisure Properties, another real estate one that's fairly stable. I mean, I say that, but look, you could have bought it at 52 and then ended up all the way down at 42. That would be a bad buy. But if you bought at 42, you'd be laughing all the way to the bank. Look at if you'd bought it at, what is that there? What is that there? $41? Imagine that. You could have made some profit. But it's pretty stable-ish. S&P Global, PayPal, MasterCard again. I've even got a little sprinkle of Netflix. Some say it's undervalued. Let's close this down now. You've seen everything I own, and that's enough of that. Let's do this one first, right? This is what, sorry for scrolling so fast, but this is what Claude was saying about the Mag 7 and a few others that I added in, like S&P Global. It said the top 6 rankings in terms of making profits and being undervalued are MasterCard, Microsoft, Meta, SPGI, Intuit, and this one, which is actually a animal health company, Zoetis. Check that one out as well. I haven't bought into that at all yet, but it's got a low PE of 12.3, 60%. Again, AI can make mistakes, and so can I, but that's what it says, 66% below its 10-year average. A staggering statistical discount. It missed Q1 earnings though, and it cut its guidance for the year, so the punishment is real. But the world's largest animal health company at 12 times earnings for a 5 to 10 year hold. Okay, that's the key thing there. If you're going to hold 5 to 10 years, it's saying this is an attractive buyer. Zoetis. Zoetis, am I saying that right? So check it out. What just happened there is it just automatically scrolled me up, which is annoying. But that's okay. Look, it said MasterCard, Microsoft, Meta, and S&P Global were the top 4. So that's what I'm focusing on. I've been buying MasterCard, as you've seen. I've got already a massive Microsoft position, and I've already made money on Meta recently. I traded out a couple times. I've made a few grand on it in the year, but now I'm buying in again. At $600, I think it's a good, personally, my opinion, I think it's a good price. Quite frankly, by the way, one of the cheapest stocks. So great, it looks great. That's what I think. But I'm not a financial advisor. Do your own research, blah, blah, blah. Have to say that as many times as possible so that I stay out of prison, I hope, forever. Quite frankly, by the way, it's going to be huge. What else we got? I wanted to go right to the bottom here because it did update it and it said MasterCard with a PE of 28. Again, fact check it. I haven't fact checked this stuff yet, and it does make mistakes, but it says MasterCard's got a PE of 28, 25% below its 10-year median of 37.8, near its decade low. Some good stuff. Expanding into stable coins. Now, I know what Ethereum and Bitcoin is, and I've actually got some in a much smaller account called eToro, completely different platform. I've got £5,000 in this account, 2 grand into Bitcoin, and I'm down 11%. I've got a grand in Ethereum, and I'm down 25%. And I've got a grand in Netflix, and I'm down 10%. And I've got just under a grand in Meta, and I'm down 10% on that too. So overall, that 5 grand is not looking too good. But it's they're smallish positions. I'm not too worried about it. And it's good to have a little bit of I've made money on Bitcoin and Ethereum before, but I used to just trade them out and make like $50, $20, $20, $50. Now I just hold it because I'm down. I could add to the positions, and on Ethereum, on eToro, you can actually buy individual positions, so it's different to trading 212. You obviously have your overall average, but you've got individual $100 positions that you can sell individually. So yeah, check out eToro and Trading 212. They're very different though. I would say Trading 212 is a little bit more for the serious investor, and in my opinion, seems a little safer, or less likely to lose money. Although eToro's got a lot of the same stuff on there, and Trading 212, you can't, as far as I know, you can't buy Bitcoin and Ethereum directly on there. Anyway, check them both out. See what you think. eToro may be better for trading, but I think you pay higher fees. Trading 212, I think you pay less fees. What else does it say about Amazon? MasterCard. I need to look up what stable coins are. I don't actually know. Agentic Commerce partnered with JP Morgan and Ripple on XRP Treasure Settlement. XRP I've heard of. I believe it's like Bitcoin. A GF score of 94 of 100. An implied 30% upside. Background noise. Okay, fine. Oh, the latest. Berkshire has exited a MasterCard position. Interesting. 10-year average PE of 37. Analyst target 647, and it's only at 495. Is it? Is it only at 495? What is the price of MasterCard? Let's check it. Let's check it quickly now. Let's see if it's talking out of its price is actually 501, so it was probably bang on. All right, Microsoft, according to many people and this AI Claude, is the best value in the Mag 7 on a PE basis even. It beat Q1 EPS by 3%. Azure AI demand is accelerating. 400 million plus office seats getting Copilot. Sounds good. Non-GAAP EPS. The trouble is, Copilot, I've actually got it on my PC somewhere because this is a Windows PC, but I never use it, and don't know anyone who does. Maybe it's okay, maybe some programmers are using it, but I know that most people are using Claude. A backup, I've got Gemini. ChatGPT is saved here if I really want to do something quick, and I don't pay for it, it's free. So I've got ChatGPT for free, quick. I've got this one running, look, I've got it running code stuff, making my app for piano teaching, which I'm making. I like Claude. Everyone's got their preference, but I just think Copilot isn't that good. Maybe they'll improve it though, especially when everyone is forced to use it because it's like the one that's in the office and everyone's got to, I don't know. Is that how they're going to do it? They just force it on everyone? Let's see what happens. Non-GAAP, I don't know what that means. EPS growing 25% year on year, that sounds good. Bill Ackman, who is a famous guy, look him up, sold Alphabet specifically to buy Microsoft. And that is probably smart because it seems like Alphabet, or Google, is now fairly valued or even becoming overvalued. I wish I'd held it until 400. I started selling it at $250 a share. Imagine I'd held it another 6 months or more. Anyway, never mind. That's a notable conviction call from one of the sharpest macro minds. Sounds good to me. Average target of 587. Well, that would be nice. I'm probably going to be holding Microsoft as long as possible. I'd love it to get to 587. I'd love to be up 30, 40% or more. Imagine it, 50%. Let's hope that a year from now, Microsoft hits this big target. All right, ServiceNow, one of the software companies that's been hardest hit. Q1 2026 subscription revenue still grew 22% year on year, a forward PE of 20 times and PEG ratio. I need to remind myself what the PEG ratio is. How am I going to remember that? I'm going to write it on one of my notes. Look, I've got this little notepad here. Boom. Finish app. Okay, this is all fine. We don't need to see this. I'm just going to make a note there. What is PEG ratio? That's just personal. I need to remember what that is. On a business with 76% gross margins and 4.6 billion free cash flow, analyst average target 184. We're at 90. Imagine that. 110% upside. The highest asymmetry in the whole list. Well, I've got some, and I'm only going to be adding to it. S&P Global, similar story. Capital markets are going to be picking up M&A debt insurance, forward PE of 20 times, a virtual duopoly on credit ratings. SPGI, the invisible toll road getting paid on every deal, a strong buy consensus, 37% implied target. Again, this is not factual, this is what might happen. Do your own research, etc., etc. But look into S&P Global, it could be interesting. Meta starting to look good again. It's come right down from its over $700 price. The largest social graph on earth, compounding AI into the ad platform, printing cash, arguably the cheapest Mag 7, although we said it was Microsoft earlier, but Microsoft and Meta almost equally interesting right now in terms of the price, in my opinion. Labs is a drag, but the core is exceptional. AI ad tools showing clear return on investment for advertisers. Google's Gemini integration has been announced. Q1 results were strong. Revenue growth 33%. Geez, sounds pretty good. Here's VICI, a completely different beast. Income plus growth hybrid. A PE of 10 times. Don't think it is, but maybe it is. Why don't we fact check that right now and see what the PE ratio is? Wow, 9.8. I stand corrected. That is unbelievable. Sounds pretty cheap. Triple net leases, 99% gross margin, just closed a 1.16 billion golden entertainment acquisition, 7 Nevada casinos, including the Strat on the Las Vegas Strip. They own Caesars Palace, I knew that, MGM Grand, I knew that, and the Venetian, and I would like to visit all three. And that would be a great life experience for me. Never been to America, let's hope I go very soon. Woohoo! 100% occupancy and 100% rent collection since inception, including COVID. Wow. A weighted average lease term of 39.7 years, investment grade Baa3 BBB. That sounds good, although I'm sure A would be higher, I'm guessing. The analyst average target is 34, and as we just saw, it goes between $25 and $35 kind of every year for the last 5 years. But everyone's saying it's a buy, all 17 covered analysts. The latest, the Golden Portfolio closed April 30. Scotia Bank raised PT to 32, price target. VICI has grown in its dividend at 6.6% CAGR since 2018. Next earnings, July 29th. Look forward to that. I'll get another 6% on my total, which is 14 grand in here, plus another 20, what was it, 26? What's that, 40 grand, 6%, 6% a year. Well, 10% on 40 would be 4 grand. 6% is going to be just over 2 grand, but you get it quarterly. So what is it, like $500-600 every few months? Pretty good. That pays my rent and all my bills for a whole month in Chiang Mai, in Thailand, where I live. My rent is only like $300 in this very, very cheap town that I live in Chiang Mai. Amazing. What a life. Intuit. Down 54% from its all-time high of $813. TurboTax is near monopoly consumer tax filing. Never used it, but I'm sure many Americans have. I've heard of it though. QuickBooks, I think you can get it on your iPhone, and I'm sure the guy in my wedding band I used to perform with used to use QuickBooks for his tax, and many other people use it too. The worry is that AI is going to take over and that we won't need this anymore. So there is a threat. But there is also an implied 34% profit to be made if it hits this target of 373. No, that's the current price, sorry. They're saying that its target is $500. We're down 54%. The sell-off looks overdone for a business that's this entrenched. Forward PE of 28, most expensive in this top 7, but the moat justifies it. AI integration into core products is accelerating. No major negative catalysts. It's purely a valuation reset from COVID era excess. I don't know about that. Long-term thesis intact. I'm not so sure, because I think the problem is that they think that AI is getting so good that you can just put all of your earnings and stuff right into Claude, ChatGPT, Gemini, whatever, any of them really, and one of them's bound to get the job done. And you're not going to need QuickBooks anymore, or whatever this one is, TurboTax. I'm assuming it's a similar product. Never used it, but I should probably know what it is. Maybe I'll look it up. And by doing that, to do that, all I need to do is write it down. TurboTax and QuickBooks. Check them out. Do your research. That's what doing your research is all about. And then it said ServiceNow should jump to number 3 because it's a red herring. The real metric is PE of 20. It's down 57%. So it just wanted to move them around a bit, and it said that ServiceNow at number 3 should actually be. It moved it to 3, and then SPGI, which is actually called S&P Global. I have to remind myself of that. Is criminally underrated, apparently, according to this. Anyway, that's fine. We can close that one. We can move on to what Gemini said, because I asked it, of these companies which are undervalued, which one has lowest risk, and rank them based on low to high risk, based on their moats, and least affected by headwinds of AI displacement. So I just wanted some more information, and I thought I'd ask Gemini and get some sort of cross-referencing from a different AI, even though they all make mistakes, but I like to use more than one. I wanted to ask about the moat. So the S&P Global, SPGI, has a legal duopoly with Moody's, which is another company I want to look into more, and you should check out. Also potentially undervalued. Let's make sure I clicked record. I did. Great. And you can still see me. Hopefully you can hear me. They're legally or practically required to get a rating from S&P or Moody's when they want to issue debt to institutional investors. A government-sanctioned toll booth on global capital markets. All of it sounds pretty good. Not too much AI displacement risk, because AI cannot replicate a credit rating. Yeah, so this is important. AI cannot replicate a credit rating because a rating is fundamentally a stamp of institutional trust and regulatory compliance, not just a data calculation. SPGI will use AI internally to cut data processing costs, but AI cannot displace the legal framework that forces companies to pay them. Primarily a cyclical headwind if corporate debt insurance slows down due to macro factors, but the business model faces zero existential threats. I'm sure it's not exactly zero, but yeah, this one it's saying is the lowest risk of the ones we've talked about. MasterCard is kind of obvious because everyone's got a MasterCard card and they've got a payment duopoly with Visa. The network effects, billions of customers and millions of merchants accept them because people have them. So very low AI displacement risk. Even AI agents will still need a payment rail network to transact. Whether a human clicks buy or an AI agent executes a programmatic purchase, the money still flows through the MasterCard network. So pretty safe, that's what it's saying. Meta has got absolute dominance in attention and data. Instagram, WhatsApp, and Facebook. Their ads are great. It's a money cash printing machine. They're an AI aggressor, not a victim. And they're using open source Llama models to make ad targeting hyper efficient, driving up their return on AI on ad spend. So the only systemic risk is if an entirely new non-screen based AI device alters how humans consume media entirely, which could be like the glasses, but then they make the glasses. So yeah, I'm not sure what that product is going to be, but for now, I mean, I'm just absolutely smashing Meta. I use it all the time. I'm uploading videos and I want to get monetized on there as well as YouTube and here and there and everywhere and Facebook, and we love it. We can't get enough of it. I like it. I even use it for entertainment. I doom scroll sometimes and I'm proud of it because I don't do it for hours, just 10-15 minutes. I've got control, man. That's what we tell ourselves. Intuit. High switching costs and regulatory complexity. Once they set up QuickBooks or TurboTax with a company, there's psychological inertia and fear of messing up their tax compliance, which makes switching software unappealing. Medium risk. The AI question, here we go. Intuit is embedding AI deeply into its products, acting as a virtual CPA. But the long-term risk is that open source AI agents become so smart they can navigate tax code or organize business receipts autonomously without needing to pay Turbo or QuickBooks subscriptions. Okay. Long-term UI disruption risk. So this one, buy at your own risk. That's basically what it's telling me. ServiceNow is actually the highest risk relative to this group because, ServiceNow is currently charging a premium for control tower features, which explains the forward earnings growth Wall Street is modeling. It faces a unique architectural threat. If AI enterprise agents can talk directly to databases and resolve corporate IT issues on their own, the need for a rigid, expensive, overarching ticketing workflow platform like ServiceNow could shrink over the next decade. Interesting. If AI enterprise agents can talk directly to databases and resolve corporate IT issues on their own. So basically, the better AI gets, the more of a problem for ServiceNow. And how much have I bought? My God. But I mean, it is massively down over the year. I don't know. Maybe I should have done more research. Let's hope that I was right in buying that and move on. If your primary goal is to buy an undervalued asset where you can sleep soundly without worrying about AI startups destroying the business model, then SPGI and MasterCard are the clear winners in this list. And they are physical and legal toll booths. If you are comfortable with tech execution risk in exchange for massive pricing compression, get some Intuit and Meta. All right, moving on, we're going to look into the macro, we're going to look into the war. As you might know, as you probably know, and I know, on February 28th, the US and Israel launched surprise airstrikes even on Iran. And it was terrible, and now shipping traffic through the Strait of Hormuz has been largely blocked since February 28th. Wow, has it been that long already? It feels like that happened yesterday, but we're already in May. Here's some milestones. On May 4th, Trump launched Operation Project Freedom. I remember seeing that. A US Navy mission to escort merchant ships out of the Gulf. Iran warned it was a ceasefire violation. By May 6th, Trump paused it, citing great progress. We made great progress. We did everything we needed to do, by the way. It was so easy. It was so great. Really, no problem. He's very confident, isn't he? But sometimes that confidence seems misplaced. As of early May, over 1,550 commercial vessels were stranded and 22,500 mariners trapped in and around the strait. As of May 14th to 15th, there are very faint signs of movement. 4 supertankers carrying mostly Iraqi crude have exited since May 10th, representing roughly 2 million barrels a day. Pre-war, about 20 tankers of various sizes crossed daily. So now we're getting how many? 4. Whereas it used to be 20. And that is only a fifth. After all this time, this war's still going on. In May, Iran's RIGC Navy redefined the strait as a vast operational area, extending far beyond its traditional boundaries from the port of Jask to Syria Island. And it's taken that from Wikipedia, and it tells you that there. This one came from Bloomberg. Interesting. Okay. Negotiations. Easy to say. Roller coaster. A 2-week ceasefire on April 8th. Yeah, I remember that. We want to go forward in time. As of May 6th, the US was trying to negotiate a 1-page, 14-point memorandum of understanding with Iran to be negotiated. See, all we get, this is actually quite good, because all you really get on the main news is just Trump going, we blew it up, and quite frankly, they've got nothing left. And then the next day, well, they could dig down and get more uranium, so we need to blow it up again. We blew up some bridges, we did some, maybe they say it was a war crime, but I don't know about that. And we just don't get we don't get all of the information, do we? We don't get everything. We don't know exactly, he says they can't have a nuclear weapon. They can't. It would be so bad. And maybe there's some truth to that. There probably is. I don't know all of the details. God, it's just I just can't even watch the news, man. It just drives me nuts because it's like you don't know what's true. It all just, well, we all go through the same thing. It's just you don't know what to trust anymore. Anyway, ranting aside, Trump has grown increasingly frustrated. He does, doesn't he? And he often says things like they're all lunatics. I've seen him say it many times on his Truth Social. He's considering a resumption of major combat operations. So that'll be more bombing, more explosions, more disruption to the world and the economy. And hopefully that doesn't happen because then everything will drop again. But then gold and silver goes up. So I've got a bit of everything, as you've seen. I've got gold and silver now. I've got commodities. Recently, last couple of months, started buying in, sort of since maybe February or March. Copper, uranium, got a bit of everything. And I should probably add to them. It balances out your portfolio. Don't put all your eggs in one basket. That is some good advice right there. I can say that freely without saying I'm not a financial advisor. Try not to buy. Like, I met a guy the other day at my badminton group who said he's got all of his money in Bitcoin. And these kind of people, and I'm like, "Ooh, I know you think that, okay, you believe in Bitcoin, whatever. It's going to go to $1 million. So you say, but you don't know that for sure. So why are you putting all your money in one thing? It's like saying, okay, well, gold's really good. I'm going to put all my money in gold. But why would you do that when you could spread it around? You want to get some high growth. Maybe I'm wrong about ServiceNow. Maybe ServiceNow is going to get disrupted by AI, and that 3K is going to go to 2K and then 1K. I hope not, but I've got other things to back it up that are going to do well. So a little bit of diversification, hopefully not diversification. Right, okay, he calls it totally unacceptable, their latest proposal. Massive life support, but then a last minute reversal. On May 19th, yesterday, Trump announced he had cancelled planned strikes on Iran, saying Gulf state leaders had requested he hold off because serious negotiations are now taking place and a deal will be made. Right. Also, May 16th, just 3 days ago, he sent Iran a new nuclear proposal and urged them to move quickly. Their new supreme leader even, rejected it as excessive and outrageous. Meanwhile, CNN reported today, May 20th. It's only been May 20th for like an hour, dude. Jeez, this is up to date. Israel is preparing to strike Iranian nuclear facilities, a move that would mark a clear break with Trump's negotiating approach. Well, that sounds bad. The US demands zero enrichment. Iran says enrichment is a sovereign right. It won't give up. The US wants at least 20-year moratorium. I don't know what that word means. And guess what? Guess what, baby? It's going on the list. Define. Gotta know what that means, and I've gotta know now. Right now, you see? See here. Iran wants to defer nuclear talks to later stages and focus first on ending the war and lifting sanctions. Trump wants a nuclear concession. Nuclear concessions up front. Iran is demanding lifting US sanctions on Iranian oil, ending the naval blockade, and unfreezing their assets, with nuclear talks to come later. Oh my God, we're still not done. Global economy, the fallout. I'm not reading all this. And then I asked it about Bitcoin, you see. I asked it about Bitcoin, but I don't really care about Bitcoin, and I'm not going to go into it in this video because it's gone 1 a.m. and I want to go to bed. Simply that. But we'll look at this, the global economy. This is the largest supply disruption in the history of the global oil market, echoing the 70s energy crisis when I wasn't even alive. Supply shortages, currency volatility, inflation, heightened risk of stagflation, which is a bad word, and recession, which is also a bad word. Alarm bells. No one wants recession. Some people think we're already in a recession. Stock markets have declined globally, and there's been a global bond market sell-off. But then oil prices have surged more than 50%. So if you got in on oil since February, good job. I actually did. I bought some of an ETF called COM. I think it's COMM, and it's like oil and other stuff. Anyway, COMM. I'm pretty sure you can look into it if you want. They have like fertilizer, and treasuries and stuff. It was a safer-ish one, and it went up with the oil going up. So I made a little bit of money on it, which some analysts are calling misplaced euphoria when the S&P briefly touched an all-time high. Energy aspects, and we just warn the world may be sleepwalking into a pretty big recession. That would be bad. US gas prices have risen from $2.98 a gallon when the war started to $4.52. Jeez, diesel is only 18 cents from its all-time high set in 2022 during COVID. or just after COVID. Qatar declared force majeure. Oh, what does that mean? I've heard that before. What does that mean? Guess what? It's going on the list. Every day's a school day. On all LNG shipments. Ras Laffan facilities. Okay. LNG spot prices in Asia surged over 140%. Okay, that's all to do with oil. The European Central Bank has postponed planned rate cuts. This is to do with the rate cuts, the interest rates, and it's raised its 2026 inflation forecast and cut GDP projections. None of that sounds really good, does it? Economists at Germany's IFO Institute say Germany and the Netherlands faced high recession risks. Sounds bad. The OECD expects the UK to be the worst hit major economy. Well, of course, because I'm English. So why would it not always be England that's the worst off? Why is it always the UK that's getting the short end? Why is everything in England going to hell? I've heard that things in England are not looking very good. Fortunately, I live in Thailand, in Chiang Mai. However, it's upsetting because all my family are in England. So I wish that it would, get itself together. And the political situation in England also not looking too good. So let's see what happens with that. Not too impressed. DHL has told customers it will take at least 4 to 6 months to normalize shipping through the strait, even after a deal is struck. The Pentagon has warned it could take 6 months just to clear the mines that Iran laid in the strait, and the operation can't even begin until the war fully ends. Mamma mia. So quite frankly, I've made such a mess of everything. I've really... Yeah. It seems like it wasn't very well planned out. And it seems quite sort of out of the blue, this war. It's a fragile tent non-war limbo where Trump has cancelled strikes at Gulf states' request, citing serious negotiations, but there's no deal yet. Israel may be preparing to act independently. Iran's new leadership is hardline and divided internally, and the strait remains essentially closed. Global economy is absorbing a historic energy shock, and the markets appear to be underpricing the risk. The next few days look genuinely pivotal. Close. Very scary stuff. Bitcoin's trading at $76,500. It's been hovering around that price. When it hit its all-time high of 126, I hope you sold in October. Good job if you did. Now we're 30% below the peak. 28, fear. 28 on the fear index. Strategic Bitcoin reserve. All right, maybe I'll read that in the morning. It's there if you want to pause the video and read it yourself. I'll scroll down so you can see what else it said about Bitcoin, connection to the war with crypto. There's a wrinkle, and a fascinating wrinkle at that. I'm not going to read it now. I've read enough. Hopefully you found this interesting and helpful, and I shall see you in the next one, which might be next week. It might be next month. I don't know. Probably be next week. I'm going to try and make this a weekly thing and just cover what's happening in the economy, what's happening in the world, cover my portfolio. You never know. Maybe I'll be down 20% next week. Maybe I'll be up 10%. Who knows? Let's see. Like and subscribe if you like this, and I'll see you in the next one. Also, if you want to learn piano, I've got a piano over here. Check out Between the Keys. I teach piano on Between the Keys on YouTube. All one word, no space, Between the Keys. And you'll see a picture of my face. And I teach piano on there. Cheers.